So anyways, I'm just going to do a little intro and I'll get to the questions in a second. I'm going to do question one, the Canadian question. So first, I want to thank you all for being here today. I'm in Rome, Italy. I'm going back to the States next week. I've been out of the country for like 4 months and it's been amazing. And it's been cool to meet a bunch of clients on their own turf and to just see a bunch of cool stuff. You know, the US is a young country and I get to see some stuff that was like this a house was probably built before the Constitution was signed. So it's been really cool. So in any case, we're gonna go through some questions in English. I'm gonna answer all the questions. I'm not sharing my screen at the moment, so I'm just gonna leave it like this, just pinned and recording and everything. And then I'm gonna answer a question, and I'll come back and check the chat. So the first question comes from a Canadian. It says, I'm a Canadian, but a non-resident, so I don't have any Canadian tax consequences. That's amazing. You expatriated, but you have your passport. It's the best. I have a lot of Canadian clients. I currently live here it is. I currently live in Turks and Caicos, where there's no taxes. Great, good for you. It does not have a tax treaty in the U.S. I'd like to set up a property remediation in Florida. I was thinking setting up a Wyoming C corporation registered in Florida with my Turks company as a shareholder. Although I will be semi-absentee owner, I'll be doing some work. Is it okay that I receive all my profits as a corporate shareholder? Will I be liable for personal taxes? So if you're doing business in Florida, which is if you're flipping property or repairing property or managing properties that are located in Florida, then you should register in Florida. To get a Wyoming company and then register it in Florida, you might as well just get a Florida company because you're going to be having to pay in both states and it's a little more complicated. It's easier just to register in the state that you're going to be doing business in. And then after that, a C corporation was probably not a bad idea. And then basically you pay yourself out management fees, not dividends, but management fees or marketing fees or whatever fees you want to pay yourself. You pay that out to yourself and maybe you open a separate company, which is an Wyoming LLC, and you pay yourself out to that company or, pay yourself in Turks and Caicos so that you have less profits than the C corporation active business. So you pay less U.S. taxes at the end of the day. That's an option always for people who are doing U.S. businesses. Pay yourself appropriately, and that way your company in the U.S. pays less taxes. The risk is if you overpay yourself, then you potentially could, potentially the IRS could challenge that and say that you're paying yourself too much and you should be paying taxes on that. This is really a deemed dividend. And in the past, it hasn't been an issue. But this is something I'm going to remind everyone a lot on this call is that Biden passed this new bill a couple weeks ago or last week or something. And basically I'm actually going to look it up really quick. Give me like 2 seconds. Joe Biden law funding the IRS. The Inflation Reduction Act. And it's nearly $80 billion of IRS funding. So the IRS is going to be hiring more, auditing more, challenging more. So you need to really make sure you line up everything and do it all correctly. And then you also have the functional part of registering properly in the States, making sure your bank accounts stay open. I had some bank accounts closed this last week. It was a headache. I mean, luckily I do this professionally. So it was like I bounced back really quick, but I can imagine having your bank accounts closed or payment processors closed while you have pending payments and needing to open new accounts quick and stuff like that, or it can be difficult. So, I know it's difficult for my clients. So, those are different things to consider when we're to go back to this question though. It's okay that you receive your profits as a corporate shareholder. And you wouldn't be liable for personal taxes in the U.S. as long as you're not doing work in the U.S. I'm assuming you're going to be doing your work from Turks and Caicos, to go back to the original question. So the real issue is how much money can you take out of your U.S. company, and the company's going to pay taxes on its profits as a C corp. It's not a bad way to set it up. So I don't think it's a bad way to set it up. But you need to make sure you set it up correctly, have the right agreements between the companies, and pay yourself a reasonable salary so that it makes sense from the U.S. side and Turks and Caicos, because the Turks and Caicos might want you to pay taxes there. I don't know if you need to have a Turks company as the shareholder, if you can just be the owner yourself. I don't know the benefit of having a Turks company as a shareholder. Usually that just overcomplicates it. It's better to do it that way if you're going to be owning real estate or stocks, because then you're more protected from an estate tax perspective. But it's not really necessary for most operational businesses. So there's a lot of information there for you. I hope that's helpful. Yeah, so Marty, you were thinking Wyoming because of the privacy, but if you have to register in Florida anyways, you still have to tell them who the owners are in Florida. So if you're doing business in Florida, it's not going to be that private. And to open a bank account, you're going to have to generally at least be the manager. If the privacy is most important when you're like doing something sneaky in your home country and you don't want anyone to know about what you're doing. But generally, like if you look me up, you can find out what company I own in Florida. And you just got to deal with it. I mean, that's just what you have to, that's just part of doing business in Florida, is having your business out there, unless you have a manager who's running it and you don't want to show who the ownership is. It just makes it complicated for opening bank accounts sometimes. So if you want to open a company, if you want to register in Florida and just have yourself being the manager, not the owner, that would be a way to do it. And then way you can still use the Wyoming company documents to open bank accounts. So it's not a bad idea to do it that way. I don't know your concerns about the privacy, how deep they are. But I think that's a good question. It's cool to jump into it a little bit. So I'm going to jump from my friend Marcel, who is here in every meeting. Appreciate you, buddy. And thanks for the question, Marty. If you need our help with any of this stuff, if you need our help with setting up the companies or filing or support, we have our peace of mind packages and stuff, just to facilitate stuff for people. So if you want to just get it going and rolling faster, that's what we're here for. Because obviously I am running a business, but I'm doing this to make some content and to help you guys out. So Marcel, let me get back to you, man. Let's see. Hi. Okay, they told me wait 5 seconds. Yeah, the I-10 too. Okay, so Marcel has a question about buying crypto without KYC. If I buy BTC using my LLC debit card with chain bits, they will send it to my wallet and it's not attached to the LLC, and the bank will appear as an expense. Would this be considered an expense from the IRS perspective? Similar scenario would be buying crypto with a debit card and KuCoin or whatever. Yeah, sure. So it all depends on the business purchase. Is buying crypto an expense? It depends what you're using it for. If you're buying crypto to pay contractors, then yes, it's an expense. If you're buying crypto to pay yourself for services you've performed, then sure, it would be an expense to the business. It would be income to you. If you're buying crypto just to hold it, then it's not an expense. It's really just, it would be a distribution from the company to you, or it would be a purchase of an asset, or it would be something else. It's an expense when the IRS says, why is this an expense? You say, well, I paid this guy to do this thing. There has to be some kind of exchange of value or agreement for it to be an expense. If you just convert it to have it in that, then it's not, or just to take it yourself, then it's not an expense. It's an expense if you buy Bitcoin for you to pay yourself for work that you've done, but it's not an expense it's not just an expense in general, However, it doesn't matter if it's an expense or not if you're not paying taxes in the US, which is to say if you're not, doing business in the US and you're a foreign person with an LLC, it doesn't matter because you wouldn't pay tax in the US anyways. You can call it an expense for your country, but it still wouldn't be an expense in the US, but it doesn't really matter that much. So that's kind of the answer there. Hope that's helpful. Hi there. I have a question regarding FDAP income, fixed determinable annual or periodic income. I've read articles about the classification of SaaS software, and since my product does not constitute an actual transfer computer program, it seems the business is either provision of service of a lease, and he's referencing 7701, the definitions. To my understanding, rental income from a lease is a U.S. SORP FDAP income where the users are based unless applicable treaty. Would the provision of services be ECI or FDAP in the case of a SaaS service? If I earn income that is classified as FDAP, would I have to withhold taxes given I do not have permanent establishment in the U.S.? Well, my man Benz, you have done a lot of research. I hope you've been spending a lot of time reading about this stuff. It's the worst. That's a great question. The question is basically, are SaaS fees or software fees considered FDAP income? From my understanding and from the practical application, FDAP income is U.S. source income. Let me pull up the definition of FDAP income. And the idea is that your SaaS software, unless you own servers located in the US that you own by yourself, I don't think it's an issue. If you're renting it, if you're using Amazon Web Services or whatever, um, then then it shouldn't be an issue because it's not yours. So it says FDAP income, tax at a 30% or treaty rate applies to FDAP income or gains from U.S. sources, but only if they're not effectively connected with your U.S. trade or business. So I get that FDAP is a very common thing that I'm talking about all the time. Rental property income such as rents or other gains from the sale of real property. So that's what it says on the website. Real property income such as rents or other gains from the sale of real property. If you look at the definition of real property, I'm not going to go into too big of a rabbit hole like you've done. We could do, we can write a memo. If you have a big business and you want to get this done officially, we can do a memo about it. But for the purpose of this call, I wouldn't consider a SaaS like software real property. I'm going to Google search it. Is software. To the extent that an intangible asset is established under GAAP as a result of an acquisition of real property or an interest of real property derives its value from real property, is separated from that real property, is not produced or Dios mío. Okay, so licenses and permits, examples. It's really something connected to land, natural products of land, water space, super adjacent to land, sculptures, shelters, warehouses, data center. REIT F owns a building that leases to a tenant, operates the building for the tenant. Yeah, it's real stuff. So software as a service on this quick review, I wouldn't consider that real property. It's inherently digital property, intangible property, a website's an intangible asset, a trademark, a patent, stuff that just exists in the sky and I cannot hold is not real property. So I don't think that this would apply. You wouldn't have FDAP income. You might have sales taxes in certain places. You might, depending on how it's marketed and stuff, you might have to deal with royalties if you're using different wholesalers. For example, if it's a SaaS and you have an agreement with a US-based company and they're licensing it for you, they might withhold taxes if they consider it a royalty because they're doing the work. But in general, if you're selling a SaaS software, it's not the US source, it's not FDAP income, it has nothing to do with well, it could be US source if you're selling to US people, but it wouldn't be a US trade or business. And I don't think you have anything to worry about. I'm happy that you've done so much research and that you're really interested in this stuff. But it's always I wish I had a big business. I think I follow what you once called lean methodology. Well, a lot of people, well, thanks for following. So to follow up, the guy Ben's asking the question, says he's just starting everything. So a little caveat from this, like if you are into SaaS, you are running a SaaS business, you are doing some kind of software business, you're just getting started. And when you start a new business, it is always lean until you start making some money and then you can invest into it. Most people don't invest a bunch of money when they're starting a business. They start doing some kind of service or some kind of product and they make money and they reinvest into the business. So everyone starts out lean in the beginning. So I wish you the best of luck with your SaaS. Software as a service is great. We all love software. And once you scale it, you don't have to do too much work. It runs itself. Next question. I'm a foreigner in the process of selling my online business through my US LLC to another US company. What would be the tax situation here? Well, there's not enough facts here. This is always can be way more complicated or nuanced than it seems. But let's assume you live in the country of New Zealand and you have a US LLC and you're selling the assets of the LLC to another US company, the tax situation is that you are selling a digital asset. You're selling something that has nothing connected to the US. You didn't pay any US taxes on this. And you take the money and you're good to go. You have to deal with the tax implications in your home country, but unless you have a physical business in the US, you would not have to pay taxes in the US. So that's kind of it. If you're selling your business, there's a lot of things to consider. Are you selling your company or are you selling the assets in the company? If you have a corp and you're selling the assets in the company, you actually would have to pay some US taxes. Or if you are a LLC and you're selling your company, then it's just like selling the whatever the company is. If you are a corporation, you're selling your corporation, then there wouldn't be a problem with that. So there's a lot of different things to consider there. When do I need to file tax returns when filing for an ITIN for the first time and for a newly created LLC or Inc.? So in order to apply for an ITIN, generally you have to file a tax return. That's the reason we use to request most ITINs, is that we say you have the tax filing requirements. So that's the general reason we use for filing an ITIN. So we actually do file a tax return, and you're supposed to file at least one return every, I believe, 3 years to keep your ITIN active. That way, it stays active. If you don't file tax returns at least once every 3 years, it won't be active. And filing a really simple 1040 NR is not that complicated, and we do it for most of our clients whenever, every couple of years. We generally wouldn't need to file it. And for a newly created LLC or corporation, if you have a corporation, you're supposed to file a tax return every year, whether you use it or not. And if you have an LLC, you need to file your 5472. Again, we're assuming that these are all foreign-owned companies. You have to file your 5472 every year by April 15th to report any related party transactions. Paying to open the company is a related party transaction, and generally you would have to file in the first year. If you fund your company in the first year and then never pay yourself or take money out in the second year, then you wouldn't actually have to file the 5472 filing in the second year. If you are a U.S. person, the LLC is disregarded and you wouldn't have the 5472 filing requirement. However, that's not generally most of my audience, and it's not really, you're not paying taxes on it. So if I'm let's say George is Peruvian and he has an LLC and he actually comes to the US and works with his LLC and he has to pay tax on $50,000 income he earns in the US. He still has to file the 5472 to report the related party transactions, and he also has to file the 1040 NR and pay tax on the income he earned from the LLC in the US, and that would be reported on Form 1040 NR Schedule C generally. So I know I'm talking really fast about this stuff, but it's recorded. You can watch it again if you have any questions or go back over it, because there's a lot of nuances. And honestly, if you're making a lot of money and you do have some stuff in the US, or you do travel to the US, you should get it evaluated, make sure that you're not exposed for paying US taxes. Is there a tax treaty from the IRS for Pakistani citizens having business in the US? That's a great question. Let's look at the U.S. tax treaties. I'm going to share my screen on this one. And let's go through it a little bit. So you can see the U.S. tax treaties here, U.S. IRS tax treaty list. And you can only use the tax treaties if you have a U.S. business, if you're a U.S. taxpayer. If you're a Pakistani person with an LLC and you're not paying U.S. taxes, you can't use the treaty. And you can see all of the treaties on the IRS website. It's right here, income tax treaties A to Z. Let's go down to P and check out our friends in Pakistan. We do have a Pakistan treaty. Cool. I don't know about all the treaties. It was signed in 1957. Beautiful. Let's check it out. And generally, the treaties are most commonly referred to define who's doing business where. So if you're a Pakistani person and you come to the U.S. for an assignment, you can see whether you did the permanent establishment. So A Pakistani enterprise shall not be subject to U.S. taxes in respect of its industrial or commercial profits unless it's engaged in a trade or business through a permanent establishment. And then it goes through, it's not very much detail in this one. Usually they have a technical treaty as well, but that's fine, whatever. So the rate of, and then the big ones that people refer to the most here, permanent establishment, and that's when you have a Pakistani company who sends employees to the U.S. to do some kind of work. And this defines like the treaty helps you define what they're doing, permanent establishment, aka does the Pakistani company have to pay taxes in the U.S. And there's a mechanism. I mean, it's not used as much, but there's a mechanism to have your position evaluated by the different there's like an international board or something that reviews treaty positions. So if you outline it all and you send it to them, they will give you a ruling on your position. It takes a while and you have to pay for it. But for bigger businesses, it's useful. For most people here watching this, it doesn't matter, and it doesn't matter at all. The real things here are the dividends, royalties, and potentially pensions. So if you are like if you're a Pakistani who did a visa in the U.S. and you have a pension and then you go back to Pakistan, this will explain how that's treated. If you are Pakistani investing in the U.S. stock market and you want to get less withholdings on your dividends, that's potentially possible here. I'm not going to go through too much of it, but it looks like, yeah, so, the rate of U.S. tax on dividends paid by the United States Corp to a Pakistani company, if you own more than 50%, the dividend rate will not exceed 15%. So, and they're really confusing the way that they're worded, and they're very specific. Like the question was from here. The question was, is there a tax exemption treaty? Yeah, so I think the answer to the question is, not the answer, it's not really a question at all. The answer to the question is yes, there is a treaty. The answer to question 2, what is the treaty used for? And the treaty is used to have a clear explanation of what happens when a Pakistani and U.S. companies, when a Pakistani company does business in the U.S. or when a Pakistani person has assets or stuff in the U.S. or vice versa. So for most people, the treaties don't apply. Most of my clients are using LLCs and the Pakistanis are not paying U.S. taxes, so they're not really able to use the treaty. It's only when they have U.S. it's not going to apply that often. If you have a real question about like how to apply the treaty to your specific circumstances, we can review that. But I was just interested in talking about this a little bit more, which is why I went into more detail about how the treaties work and what the treaties are, instead of just answering your question. Yes, there is a treaty. If I'm paying a freelancer in Colombia, I simply have to have them fill out a form WABEN, and since they're a non-resident doing work outside the U.S., there is no withholding, correct? Assuming you are a U.S. person or a foreign person, there's no U.S. tax withholding. So in my example, I pay people, half of my team, more than half of my team is from outside the U.S. I'm outside the U.S. right now, and I don't withhold taxes on anyone. And it's because they're not in the U.S. and they're not performing any services in the U.S. If they were in the U.S. performing services, then sure, you would have to consider withholding and look into that. But if they're in their home country performing services out there, you don't have to withhold taxes. And another way to look at it is if you get paid, like for example, I get paid by people outside the U.S. more often than not. So, the other day I have a guy in Spain who paid me. He's not going to withhold taxes on a payment to me for my services locally. He's not going to withhold taxes in Spain because I'm not subject to income tax in Spain. If I was in Spain doing work, I could see that potentially being an issue, but I haven't had that problem. I haven't had anyone withholding taxes on payments to me. I know in some countries like Colombia and Ecuador and South American countries, if you pay for services which are delivered outside the country, that's when you do have to withhold taxes. But in the U.S., that just is not the case. You do not have to withhold taxes on payments to contractors outside the U.S. And you know what? I'm going to go into this a little more because I love this topic, and I'm going to show you why from the publications. I think it's publication 519 again. Publication which is a great publication. It is the Tax Aliens. And I'm going to share my screen really quick. Again, I talked about this in the last meeting and I want to make a dedicated video for it, but I didn't do it. So here we are, publication 519. Let's look at I don't want the HTML. I want this withholding on wages. Here you go. So withholding from compensation. The following discussion generally applies only to non-resident aliens. Taxes withheld from resident aliens in the same manner as citizens. So wages paid to a non-resident alien for service performed as an employee are usually subject to graduated withholding rates. Therefore, your compensation. So there's withholding if you're in the U.S. And that's the big difference here. And we have to see the notes here, withholding on wages. Okay. Independent contractors. So there's no employee-employee relationship between you and your compensation is subject to 30% rate of withholding. And that's when you're engaged in that's when you're doing it in working in the United States. I'm trying to find, I think it's up here. Oh, really great. Okay. The next page. Special events, I don't know, tax code. Oops. This happens every time. I look at this and it's hard to find the exact thing. It's 60 pages, so I'm trying to find the exact snippet, and I did it in the last video where it tells you who's subject to withholding taxes, penalties. Cool, it should be here. Paying tax through withholding or estimated taxes. There you go, notification of alien status. If you're a resident alien, you must let your employer know whether you're a resident or non-resident alien. That's the W-9. If you're a resident, you do W-9, or a non-resident alien is a W-8 BEN. And they say employer. Again, this is confusing because we're talking about an employee. Most people working abroad are generally independent contractors. And it says it right here. Okay. Wages. Now we have to look at the So the problem is that this is all referring to people doing work in the U.S. Final payment exemption. Income, withholding from other income. This is something we talk about a lot, tax withholding partnership income. If you're a foreign partner of a U.S. Of a partnership with U.S. trade or business, then it has to withhold taxes at the highest rate. No, this isn't what I want. Special events promoting real estate sales. I have to look at my last video and figure out where it was, and if it's not in this publication, where it would be, because I'm getting confused again already. Any comments from, whatever, I'm gonna go to the next. Source of income, exclusions from income, how are aliens taxed? If I open a single member LLC and hire someone to open the company so articles do not contain my information, should I ask the registered agent to witness the operating agreement? I heard banks require this to prove my ownership in addition to the resolution. I'm not sure what other companies are doing, Vince. What we do with our clients when we open companies, we take care of all of that for you. So I don't know what other people are doing. There's a lot of different companies. I don't know what they're doing with your information. I've seen it done so many different ways, and I see banks accepting different things. So if you open the documents come out looking different from a lot of different companies, which I kind of don't understand. There's like 1 or 2 pages from each state that look the same no matter what, and then all the rest is kind of different every way. And I don't know what they're doing with your information. I don't know how they're storing it. I had a bunch of clients a month or two ago that came back to me. But they weren't clients. They were new interested prospects who wanted to work with us because they basically registered their companies with this business, and they went out of business and they closed their company. So the registered agent, all the support and all the whatever support they had was basically gone, and they needed someone to at least be the registered agent. So different banks require different stuff, and the operating agreement is generally good to have. And you have to work with a company that you trust that's not going to sell your data and your information out, and also going to open the company correctly, both with the state and give you the correct documents to protect your ownership in the company, and also allow you to open the accounts that you need. So let me go to the next question that we got here. Sorry for the last one. I'm on a tangent. The answer is no. There's no withholding. And I answered it better last week. Sorry, it's just hot in here. In Italy, they don't have good air conditioning anywhere. I have a unit up there, but it's not doing it for me. Okay. On the payee end, do I need to get any forms aside from the WABEN? No. If you're paying someone, you just need to determine their tax status, and that determines whether you give them, basically, if they're a contractor and they're outside the U.S., it determines whether you give them a 1099 or not. They give you a W-8 you don't have to give them a 1099. You can't give them a 1099. So that's a little bit simpler. Do you ever help with startups needing a 501c3? It is for a new children's home in Mexico. We needed to receive donations and give tax receipts. So this is a great question. So I'm going to explain right now a little bit about how nonprofits work, the 501c3s, how they work in the U.S. So in the U.S., a nonprofit is basically a regular corporation that receives approval under code section 501c3. And there's a couple of different sections in the same region that grant different levels of non-taxability. There's public charities, there's private foundations, and they have different forms that are required to be filed based on what you're applying for. This is, I think, applied for on the form 2300. And it's really, like I said, you open a U.S. Corp and then you fill out an application to have it have tax exempt status. And then you have to operate it in a very specific manner to maintain that tax exempt status. Only a U.S. registered foundation can give the tax receipts to people in the U.S. So if I, as a U.S. citizen, donate money to a Mexican charity, it's not tax deductible for me. The Mexican charity has to be registered in the U.S. for me to get a tax deduction. So that's why many foreign charities can register in the U.S., or they can just open a new nonprofit branch in the U.S. Things are very nuanced and complicated with nonprofits where you need specific, it's harder to open bank accounts, and there's just a lot of rules with how you operate, because there's a lot of, on the very large scales, there's a lot of abuse in nonprofits. Most recently, I don't know much about it, but look up the NRA, the rifle, the gun, the pro-gun lobby. It's like a nonprofit, I believe. I'm not an expert in this, but basically the owners and the guys running the NRA were just completely abusing it and paying themselves a ton of money and buying all kinds of stuff they were just using personally, and just abusing the funds that were being donated, giving way too much to politicians, and just being really messy. And I think they got in a lot of trouble. I have read a couple articles about it, but there's a lot of that happens on the higher levels. So that makes it harder for smaller people to do that. You know, a lot of people want to just not pay taxes, so they open a nonprofit, but it's way more complicated than that. It's a great tool for the ultra wealthy, or for the people that want to obviously solicit donations and give tax receipts and help out. That's like for a children's home. Generally, my clients are more the wealthier people who want to have like a side thing, or entrepreneurs who want to use it for the ad grants or whatever. There's a lot of reasons to open a nonprofit. It's just another tool, another thing, but there's a lot of requirements to getting it set up and to get it running. And the big difference here is that in order to give tax receipts to Americans, it needs to be registered with the IRS. If it's a U.S. Nonprofit, you can do the EZ form, which is faster, and you can do it online, but you're limited to $50,000 of donations over the first 3 years. So it's a little bit limited in how you can operate. So I do help with this, and I can help establish and set up nonprofits. I don't work a ton with big nonprofits and operating them. I am working with one, the Jason Aristizábal Foundation. I guess it's fine to promote it. I've been helping them on a nonprofit foundation, and they've been helping kids with disabilities in Cali, Colombia, just get more care, because in some of the less well-off neighborhoods out there, there's no support for disabled children. So whether you're building homes for children in Mexico, or whether you're helping children with special needs in poor communities in Colombia, I think it's great work. And I'm happy to, talk to you about potentially helping, set this stuff up for you. And, thanks for doing that. That's really great. That's an aside, right? Okay. Thanks, Marcel. See you later, buddy. Tony has a question. In order to get the ITIN, can I fill out a zero income 1040-NR if my LLC is taxed as a C Corp using an 1120 form? I think I answered that, but this is asked differently. If you want an ITIN, you file a personal tax return, and you need to have a certified passport by the issuing agency, which is generally like an embassy or something, or by a certified acceptance agent. So that has nothing to do with your 1120 C Corp. It's completely separate filing. So if you want an ITIN, you file a 1040-NR with a W-7 with a certified copy of your passport, and you have to have a reason. Generally, you put some income on there. I wouldn't file zero. You have to put you had some income, and that's why you had to file. And all the ones we file, we put some income on there for the clients, and that's how, you have to have a reason to file. So we pay a little bit of tax with most of the ones we apply for, but you can't really do it by yourself very easily. It's kind of, even if you don't do it with us, it's probably better to pay someone to do the ITIN for you. And the ITIN isn't essentially essential in every situation, but it's useful to have, sure. Okay, so that's a good question, Tony. Good question about the 501c3s. Great question. How can I open a PayPal account in the United States? That's a great question. So if you want to open a personal PayPal account or a business PayPal account in the United States, you can go on paypal.com, and you need a VPN. You need to have a US IP address, and PayPal is kind of good with the VPNs. They can tell when you're using a VPN. So what we've done for some of our clients is we do like a Zoom meeting, and we'll do it together while I'm in the US, or we'll use one of my team members who are in the US, and they'll do it on the computer with you, because you need to kind of be in the US. They just have really good anti-VPN stuff. So unless you're using an obscure VPN, they're going to kind of know you're in a VPN. So that's the first step, is to be in the US or apply from a US IP address. Second is you need to have generally a US address and some kind of US tax ID. If you're a personal applicant, you need to have a social or an ITIN. If you're a business applicant, you need an EIN. However, eventually you're going to need an ITIN or a social when they ask you to verify the owner information. They ask for the verification questions. They have to ask different questions almost every time, and ask for different documents in different situations. But that's how you do it. You generally will, in order to scale and use the PayPal account, you're going to generally need a U.S. Social Security number or ITIN number, or someone who's involved with your company who has one of those two numbers. So it's not like the easiest thing to do, but it's definitely possible. But it's way more difficult than bank accounts and payment and like Stripe accounts, because you basically need the ITIN, and there's a little bit of back and forth, and PayPal just kind of sucks. I talked about it in But they don't suck. I use PayPal in case they're watching this, and they, yeah. But basically, I've been using PayPal for a long time. And when I talked about this on the last call is I think that PayPal doesn't let people open U.S. accounts that easily because they want to get all the exchange fees because so many people are selling to Americans and the cost to put the money in your home currency is just so high. So that's what I think is happening in a lot of situations. Next question. Hi, I don't sell anything. I don't live in the U.S. Furthermore, I translate books and the U.S. government takes a big chunk off the payments and the clients make. Why? Well, first of all, the government isn't taking the money. Your clients are sending the money to the government. So your clients are taking the money and sending it to the government. Certain types of income and payments, FDAP income specifically, are subject to U.S. taxes. Generally, these are going to be what would potentially be applying is royalty income. And it's a little complicated because royalties are generally when you have, like, for example, if you put a book on Amazon and Amazon sells the book, they pay you a royalty for that. Or if you have music online and you're licensing music, you're getting paid a royalty for it, which is different than translation. It depends how you're registered, and there's different ways to get around this. If you are making a lot of money and you want to really address this and fix this, I can definitely help you in a private consult. What I've done with clients in the past is potentially open a U.S. company, like a corporation or something, where you can then give a W-9 and you wouldn't be subject to the withholding. If you open a multi-member LLC and gave them a W-9, they would probably stop the withholding. So that would also help. And then you can take the position that it's not subject to withholding, and then you don't withhold the taxes. It puts the ball back in your court. I've done that for clients as well. We get that done really quick. And we can also get a lot of the money that was withheld back by filing a personal tax return. And I've done this for clients as well. So unless you're getting royalties, dividends, or rental income, or some other kind of U.S. source income, those are really the most common instances. Or the other instances when you are in the U.S. working as a foreign person, they should withhold taxes too, and that's not generally number one. The first item, compensation for personal services performed in the U.S. But most people aren't doing that. So if you're not any of those, you probably can get the money back, at least a big chunk of it, as this is worded. And then you can also, there's ways to get this to stop. But the real person, the U.S. government isn't taking the money. The person who's paying you is sending the money to the government. It's different. And I say that because in South America and Latin America, when a wire transfer goes out, the government does take the money. In this instance, if I'm withholding taxes from someone, if I pay you $1,000 and you're subject to withholding, I'm going to send you $700, and I'm going to actually send the government the other $300. And it's additional work, and it sucks because it's easier when the bank does it. If I have to do it myself, I have to register for an EFTPS account. I have to file 1042 forms, and it's not fun. It's annoying. So, let's have another call. Send me more details. I can talk to the people who are paying you, and I can enlighten them and help them with the filings, and maybe we can fix it out. Just work on that. That's definitely what I do. Back to PayPal asking for SSN even if you apply. Tony's got some questions. Okay, Tony. Move this a little closer and get more comfortable. Okay. Tony says, back to PayPal. PayPal is asking for the social even if you apply for being physically in the US. Yeah, the PayPal's always going to ask for a social. Tony, I wouldn't use your social for everyone's PayPal accounts. Even if they ask you, you have to get them an I-10, make them wait. Never, yeah. Okay. So Tony said, if a company invests in buying tax liens, earning the interest, or the interest compared to earning a royalty, well, you know what? If interest is actually FDAP income. So it doesn't matter. It's not really compared to earning royalties, actual interest, and it is, sounds like it would be subject to US tax. Let me share my screen. Let's go to that really quick. Share screen. Right here. Tax treatment of FDAP income, which is not effectively connected income, which is the exact definition of a tax lien paying interest. We got it right here, interest. It's number 3. Tax at 30% rate applies to FDAP income or their gains from U.S. sources only if they're not connected with a U.S. trade or business. I don't think investing in tax liens is a U.S. trade or business. And if it is U.S. trade or business, then you have to file tax returns and pay tax on the income anyways. If there is an Italian person who has an LLC who's buying these tax liens, you have to file the 5472, and then you have to file a form 1040-NR, Schedule OI, no. So on this schedule here, let's look at the return. You can see on, Form 1040-NR, page 3. Damn it. Look at the Schedule OI. Look at the instructions. Here you go, instructions for Schedule 2, Schedule 3, Schedule A. There you go, Schedule NEC. Okay, there you go. Form 1040-NR, Schedule. They changed this last year, so I'm a little rusty on all of the stupid pages. There you go. Here we go. So tax on the income not effectively connected with the U.S. trade or business. So basically, we're going to have the interest here. I guess it's going to be C other 3. So it's going to be with, there's a tax treaty with U.S. and Italy. So U.S.-Italy tax treaty. Assuming their plans, I think that's what I think that's the case. Let's check out the technical explanation. Let's go down to interest, paragraph 2, 10%. Cool. So let's just say it's 10% without reading further. So it's 10%. You got taxing interest of $10,000. And it's going to be $1,000 tax. And that's going to go on, it's going to be, add all the columns up. So it's 10, 3, and there's going to be 1, 2, 3. So that would be the tax, and you add them all together, and this is going to go in your 1040, and that's we have to pay tax on this. So that's would be on the personal tax return, even if it's owned in an LLC. That's how it would have to be reported. If you have interest income and you're an Italian citizen, you can claim the treaty for it. Hopefully it doesn't go over your heads too much, but that's basically how it works. Okay, so I think that answered the question. That answers the question on how to report and pay taxes. Okay, so the follow-up question there is, at this point, instead of having LLC tax as C Corp, is it better to have a Corp having a different entity? So in this case, it's better if you just have an LLC and you use the tax treaty and you're Italian, you're only paying 10%. If you have a C Corp, you're paying 21%. Nothing else said. You could potentially claim expenses against that income as well. It can be a little more nuanced. It's a more complicated filing, but in general, if there's not many expenses, you can just do it. That's how it would work. So we can confirm the rate and look into the treaty a little more. but that's generally how we're looking at it. And generally it's easier to just use an LLC and file that 1040NR and just pay your 10% or 15% tax instead of filing the corporate return, which are, potentially have audits, potentially double taxation. You pay the corporate tax, they call it a dividend. It's just like most people don't operate the corps the right way. And then you have your corp, which is mostly run by a person who lives in Italy. Is it permanent establishment? Do you have subject tax in Italy? It's more complicated using a corp. And again, with the reduced treaty rate, it's actually less taxes too. So the filing is kind of tricky, but if you work with someone who knows what they're doing, it can be easy. If you have the right information, we get it all right away. What's happening with ITINs? Is it faster now? If you apply now, when should you expect to receive it? So the question here we're looking at is, new news with ITIN applications. The new thing with the ITINs is that they still take forever. We're hoping that they still take 3 to 7 months, and the IRS, I fill out 4 applications. The IRS is saying no to one of them, and they're all prepared the same way. I don't understand the methodology behind it. And to wait 6 months and get rejected is crazy. So it's slow. We're hoping that the new funding will help them put resources behind this and organize and get it sped up faster. If you're interested in becoming a certified acceptance agent, you have to wait a year to apply. They close down applications for a whole year. So if you haven't gotten approved already, it is a slow application there, and it's hard to get you. There's nothing you can do. They're going to make it quicker in a year, but right now it's basically shut down. So if you apply now, you should expect 50-50 to receive it in like 5 months, 6 months. Sorry, my thing fell. So we have a last English question. Then I can try and do some Spanish. I'm pretty roasted today. I came from Florence, did a lot of traveling. Having a U.S. LLC as a non-U.S. person, and then you get U.S. residency, when will you have to pay taxes for the LLC? From the day you get it, you have to pay taxes? Okay. If I have here's the question restated in a way that makes sense. If I have an LLC and I'm not a non-resident and then I become a U.S. resident, when do I have to pay taxes on my LLC profits? You only have to pay taxes on income earned after arriving in the U.S. So if you closed a huge client, they paid you $500,000 on Tuesday, and then you move to the U.S. to start your residency on Thursday, that income from Tuesday is not subject to U.S. taxation. It's all about when you arrive in the U.S. and you start doing work in the U.S., that's every profit from then on is subject to U.S. taxes. So it's a pretty clear cutoff. I actually had this call last week. If you're moving to the U.S. and you have an LLC, just know that once you land in the U.S., the day one you land there is when you're starting your residency. There's like 10-day cutoff rules. There's nuances. If you make a lot of money, let's do a private call and go through it. But in general, when you get in the U.S., then you're paying tax on your worldwide income when you arrive, depending on at what point in the year. If you come right now, towards the end of the year, you can file as a non-resident. You only pay tax on income earned personally in this time while you're in the U.S. If you have companies outside the U.S., you don't have to report them or those profits until you're a full year U.S. resident, where you have to report your whole worldwide income. But if you still qualify, if you're in the U.S. less than half a year and you're a non-resident, then you are okay to do it that way.